Joe Vitale, American Retirement Advisors with the Gradient Investments weekly market update for the week ending April 8th, 2024. Let's get into the weekend review. We've had a strong first quarter, but regardless, stocks are going to pull back a little bit. We can't always keep going up and up and up. So after a strong first quarter, the international developed markets indices were down while the emerging markets were slightly higher. They pulled back a little bit. The jobs report for Friday took center stage and was more robust than anticipated as payroll employment grew by 303,000 and the unemployment rate slightly declined to 3.8%. However, we're seeing a lot of the full-time jobs change a little bit and there's more part-time jobs. It's really not in the data there. Let's talk about the upcoming economic release. Inflation data will be reported on Wednesday, which was yesterday. Given the stronger than anticipated jobs report, investors will be looking at this data closely to examine whether the resilient jobs market is reigniting inflation rates, and it did tick up higher. We'll talk about that next week. So yes, that did happen. Let's talk about the market outlook. Gradient is closely watching the economic trends. The jobs reports to us was another indicator of a resilient economy and one where consumer spending continues even as they add to credit spend. The other story that will begin to heat up is the corporate earnings, with the companies reporting their Q1 2024 results and providing updates to their outlook. So that's going to be important to see what the earnings are because that's what drives the market. We see a case for better than expected reports given the resilient U.S. consumer combined with large-scale business spending initiatives like the nearshoring supply chains back to the U.S. So that's all good news, hopefully to keep things moving forward. Let's talk about the stocks in the news. Johnson & Johnson, which is owned in the G50 and the Core Select portfolios, agreed to acquire Shockwave Medical, which is owned in the G33 for $333 per share in cash to extend J&J's position in high-growth segment of the cardiovascular intervention. And then there's SLB, which is owned in the G50, agreed to acquire ChampionX in an all-stock transaction valued at $7.75 billion. Now, ChampionX is a global leader in chemistry solutions and engineered equipment for drilling and producing oil and gas. All good stuff. Let's see. So that concludes this week's market summary. Thank you for being part of the ARA family. If you'd like to get a hold of us, remember 855-756-5700. Visit us at aradvisorsinc.com. Remember, we're going to see a little bit of markets ups and downs. The volatility index is a lot higher than it's been. We're seeing a lot more volatility. We're also seeing the bond yields rise right now. So we're seeing the 2-year and the 10-year rise. So that's a lot of volatility. People are flying to safety, especially with the numbers. So what does that mean? That means we could see a little bounce. We could see a pullback. We already saw a little bit of a pullback. But as long as we talk about this all the time, being properly allocated, having some safe money, having some growth money, because we just don't know. We don't know what the market's going to react to. Nobody does. There's no market timing. The time we jump in, it's too late. The time we pull out, it's too late. We keep properly allocated, have our safe money buckets, and have our growth money. Make sure we've got some good quality growth and value stocks. We're going to be good. So God bless you. We look forward to seeing you again next week.